Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is February 17th, 2023. S&P sitting at 4055. My name is Ian McMillan, and today I'm joined by one of our two very talented analysts on our team, Kevin Ferrari. So, big week in the markets. Some markets, obviously stocks still consolidating. A little bit more movement in fixed income. Is there anywhere you think we should start, Kevin?
Well, you kind of brought that up. Kind of some consolidations we're seeing. I don't know why it seems like every time I hop on here, it almost feels like we go nowhere for the whole week leading up to. So I don't know. It must just be me, I think.
Yeah, maybe anytime we hit some volatility, we'll just bring you on.
Yeah, no kidding. And we'll
try to
just
get the
let it settle down for a minute.
we won't. We'll stop bringing you on in uptrends.
No, I'll just kind of stay in the background and not touch anything. Probably be the best way to do it.
So we did have a client letter that went out this week. A lot of the stuff, or a few of the things that we discussed today, were also discussed in that letter. So if you're a client, please be on the lookout for that. I think it hit your inbox yesterday. But obviously the big thing that we've been harping on, we talked about it last week. We've talked about it for a long time. We talked about lunch and learns. As everyone knows, that 4180 level, those highs from last June, kind of the same range, 4080 to 4180 that we've been consolidating in for, it's only been 2 weeks, but it feels a lot longer.
Mm-hmm.
And other, I'd say all major indices kind of consolidating. You've got, the Russell sitting here between 1900 and we'll call it 1970. Obviously, we know about the Dow, pretty much been in the same spot for a few months now. And then the NASDAQ. The NASDAQ consolidating, here above, excuse me, this 12,100 level. Can't get over also its highs from last June around 12,700-ish, 12,800, we'll call it. So no dramatic, no confirmation yet of the continued uptrend we've seen, but not a lot of damage done.
No, not really yet anyway, right? Like it almost seems like usually when we get to these points on Fridays, it's like you can kind of see maybe some foreshadowings of things that might kind of like next week will look, but really you're just not quite there.
Well, and everything was really great until
recently.
Yeah, the last hour of trading on Thursday, I guess there's some theories out there about what that was all about. But at the end of the day, bottom line is price is kind of starting to, at least on the S&P, we've lost that as of this morning. We've lost this 4080 level, which is a short term. I mean, this is not a long-term concern, short term. These were the December highs, early December-ish, December 2nd, and I think we revisited there in mid-December. And we reconsolidated for a little bit in July. I mean, this is a pretty well-defined range, this 4080 to 4180, and now below that. So does that continue?
Well, especially if you look at it like on a weekly, the last 3 weekly candles essentially kind of went up and tested that 4180 level.
Those long upper shadows.
Mm-hmm. So kind of really the last couple of weeks have been similar nature for the most part. I mean, I guess these last 2 weeks are essentially kind of inside weeks there from end of January.
Yep. Yep. Yeah, we have had some inside weeks. I know Dan Gorg, who run our team's been pointing that out. And I think the Russell and is still at double inside weeks. And also the NASDAQ. I'm not sure about the NASDAQ. It is close though. Dow actually an outside week. We went to both extremes on the Dow from where we had been the last couple weeks. Tried to move higher on Monday and has still just cannot, for the life of it, get above 34,000. But there's been still some pretty good action underneath. When you still, I mean, even a day like today, S&P's down 1%, and you've got plenty of green stocks out there. Now, yeah, there's more, there's more red than green, but even I sit here and I look at, what's inside the ADPV ETF, and I mean, you've almost got half of these green today. So we'll see. Again, there's a long way to go to the close. We'll see how this ends up. But
well, that kind of matches what for how long we've been bringing that up. I mean, it's kind of almost like a stock pickers environment, right? Where you get some of these certain, maybe like sub industries or even just certain names within some of these sectors, industries that kind of go on runs. And then, if you're staying on top of those, there's opportunity there. Like this week, we're kind of seeing some things out of like some of the home builder names, like aerospace and defense names, a little bit here or there. Nothing crazy, but some action,
Yeah, those areas have absolutely held up well. I throw them, XHB, I throw that in the consolidation phase. Like a lot of these. And is it healthy? Yeah, you get closes like yesterday, and home builders today down 1.5%, but in the grand context of, what's going on.
Well, that's kind of an ugly weekly candle. The way that's
it is, and there's going to be a few of those. I assume, semiconductors. Yep, that could be and that goes back to your upper shadows. You look at SMH having trouble breaking above this 246 area.
Really, actually, just because we're looking at the weeklies, the ITA, if you're using that for aerospace and defense, not as bad looking.
Not as bad at all.
That could change right here in the next couple hours, but
yes, certainly an area that has, as far as a weekly candle, doesn't look like it's going to close at the lows. What about in the commodity sector? Anything special? I feel like we, crude, the big one that everyone likes to talk about. Crude's really been pretty quiet and well behaved.
Yeah, kind of almost forget it's there.
Yeah, there was just so much talk about crude, obviously last year, and gas prices, crude oil prices, sitting at $75, and that's where we were late September. So, yeah, we got up to 92, but and it's been the last 3 months where crude we've traded in between about 70 and 80. So pretty tame given what we all went through in 2021 and 2022.
Yeah.
Really, and really, really this all, I guess, started with the negative prices back in April 2020. Probably one of the more calmer 3-month periods we've had in crude. What about our other commodity favorites, Kevin?
Yeah, if you want to stick on the energy side of it, nat gas, has been getting hammered pretty hard.
Yeah, that's breaking down again.
Not more, yeah. You kind of had what seemed to be a consolidation here, right, for both the first half of February, but today definitely kind of resolving that lower. And that's been one heck of a run to the downside.
Yeah, that
dramatic.
hasn't taken a break at
No.
all.
Not really. I mean,
I mean,
that here in February, that was kind of about the only break it's taken. And then, yeah,
had one, well, 9 of the last 10 weekly candles have been red. I'm eyeballing that. 8 of the last 9, somewhere in there. Yeah, it's going to break this 2-spot 3 level today. And energy stocks, honestly, not that. Now, I guess if you've picked your spots, Exxon Mobil, not a horrible start to 2023. It is positive for the year, up, 5, 6. In fact, I mean, it's actually having a great run until this week. It's back down to 111. But when you look at XLE as a whole, not a great start. In fact, now it looks like they're negative year to date, with the S&P up probably 5 or 6%. Yeah, S&P, even with today's drawdown, up 6.5% on the year. So certainly no continuation there of that relative strength outside of very few select stocks,
right.
I would say.
Which is kind of the general theme in a lot of these industries and sectors, right? It seems like you really got to kind of dig to find your individual names or kind of certain sub industries, things like that.
Yeah, I agree. And I think a lot of this, something we had mentioned earlier about it not quote unquote looking too bad. I think that also kind of is in line with the fact that, RS, so equal weighted S&P continues to outperform. IWM, Russell 2000 relative charts, trying to give it a go again this week. We got, breakout was that early February, kind of tried to break out on a relative basis. But this week, again, a very strong showing from the average stock. I think also the Russell 1000 versus the S&P. You can use IWB for that, breaking a rate of trend that it's been in since February 2021. So a basket of 1,000 stocks outperforming a basket of 500. I think that bodes well for breadth. Should also hopefully bode well for the ETF. So there are things underneath the surface that's, not so bad this week, although, the overall context of some of these weekly candles, as you mentioned, probably not going to be super pretty.
Nah, it doesn't really give you the warm and fuzzy feeling that you're probably looking for to end the week. But I mean, which I think we kind of talked about, like mid caps, kind of that forgotten middle ground, really holding up relatively well compared to kind of your large and small caps too, which is interesting to see.
That's true. I mean, mid caps on a relative basis they had a great week. And if you look at something, you look at MDY, they're above their August 2022 highs. And that is something that the S&P hasn't really even attempted yet. We're just trying to get over those June 2022 highs. NASDAQ isn't even close to attempting that.
No.
Small caps, of the four, it's the best 10. But yeah, mid caps, you make a great point, hanging in there very well.
Which would be kind of interesting, because really, how often do you sit there and kind of look around at mid caps? Usually you get right? Small caps, you get Qs, and then it kind of is easy to forget that it's there.
I think that they're very easy to forget. And even for I think most investors like to play in the extremes of, and even in the instance you don't have, you've got your small cap lineup of ETFs, and they'll come in all sorts of, sizes. and your large caps, but no one comes up with like a mid cap consumer discretionary ETF
Right.
or mid cap growth ETF. Well, I guess there are, but
Right.
there are, but I mean, they don't get a lot of, they don't get a lot of airtime because you assume, okay, well, if you would just want to tilt either way, and I've honestly been guilty of that bias for many years of mid caps are pointless, and you should be able to just pay to use the phrase I usually, the extremes of either. And we've even got mega caps and micro caps, and I feel like those get more attention than mid caps. It's like the middle child who
just gets forgotten.
Yeah, it just kind of is forgotten, and they're left to go play on their own in the backyard, and then lo and behold, they ended up being the smartest and the brightest kid. I don't know, but that's kind of the vibes we're getting here the last few months.
Because was Kevin from Home Alone, was he kind of around that middle child area, or was he younger? So it could be one of those.
No, I
forget him at home, go on vacation.
Definitely more in the middle. There you go. And it's going to be up to mid caps to maybe just save the house.
Because I mean, if you look at that relative chart long term, you're really not wrong for the past 20 years. I mean, the S&P essentially sideways, if not, more recently kind of tilted more towards underperforming. So really, what was the point? You know what I mean? But who knows? Maybe that changes now.
Could be. I mean, and they had a great, we look at 03 to 08.
Mm-hmm.
Another period where, your average stock.
So maybe that.
But then you had small caps drastically outperform mid caps in that 03 to 08 too. So, and we'll see here. I mean, small caps versus mid caps, right here. Yeah, I mean, new relative highs, they're not looking too bad. All right, anything in the crypto? Golly, it's been so long since we talked about Bitcoin on this podcast, which, I mean, I'm not necessarily complaining about, but off to a strong start in 2023. A really strong start from a technical perspective. Things have been fixed. I don't know if it's a car I want to take out onto the road yet, but above a 200 day, flattening out 200 day. I think if you get to this 25,000 level and hold it, these highs from earlier in January, also kind of these highs from last August, mid-August, back when stocks also peaked. So that's interesting to see. So Bitcoin back to its August highs before where they peaked before stocks. Interesting. Now a lot of that's probably beta too.
Mm-hmm. But yeah, it's kind of interesting. Well, at least this week. I mean, if you keep that same time, because I know we've talked about like the 200-week moving average before. I mean, the weekly candle, the upper shadow for this week, just kind of touching that, and now kind of moving back lower. So that'd be interesting. I mean, it technically closed above there back in kind of August, like you said. That was the last time. So
yeah.
Curious to see how that pans out.
Well, and then so with stocks, Bitcoin, obviously commodities, kind of the one thing they have in common is their denominator, the dollar, which has been on a nice move, also had some consolidation, a decent move Wednesday, Thursday, decent move this morning. And this has been one of those like, weak dollar is good for stocks. It is in the environment we're in now. That does seem to be the case. So, and I'd say, the dollar pretty far off its highs. This is a short-term kind of this 104 area, 104.7-ish.
Mm-hmm. Yeah, really that whole range from 100 to 104. I mean, it's kind of where you see a lot of it seems like inflection points, and like DXY lately. Oddly enough, it's essentially where we're kind of seeing a bounce here. So It's going to be par for the course. I'm sure we're going to close it right.
Still never got overbought. I mean, one of the stranger RSIs I've seen over the years to go down to 31 on multiple attempts over a multi-month period, 3 months, somehow never get oversold. But yeah, I'm not necessarily super bought into that the dollar has bottomed, but overall weekly candle, not bad. And still coming off this big weekly candle from late January. So some continuation there. But I think we're going to have to get up to like 105 and then it's below its 200-day too. So you've got a 200-day moving average that is now flattening out and thus would then start to roll over. So that could be some resistance here if we were to break through 105, that 200-day moving average sitting at a little above 106. And I would
timing of that kind of makes sense too. I mean, we were talking international quite a bit to start the year off, and that's really cooled off too.
And it's really cooled off.
Yeah. Not really a big shocker there, I guess, when you think of that in relation to the dollar.
Yeah, emerging markets now flat on the year. They had been up probably like 8%. Had a great January. And that's, all that's also coming off those October lows. So it's been a rally. If we want to put all these rallies in context, we should, talk about, we've been doing this since October on a lot of these indices and stocks. And IW, it's coming back. It's got a 200-day that's flattening out. That's when, this continues, it turns upwards. So coming back to test a 200-day, I don't think all hope is lost.
No, and especially when you bring that up about kind of that international run starting in October. If you look at like Europe or either IEV or EFA, they had a pretty good consolidation here for a while, which pretty healthy considering the run they had. So if it continues moving higher out of here, I don't think you can really necessarily be surprised. It's not like they're necessarily breaking down kind of where we saw the most strength in international. So
I would say the dollar, one area that's, I feel like never, I don't know, gold, precious metals just, I don't know. I just dollar up, dollar down. I feel like people don't want to buy them. Silver. Yeah. Silver had spent a few weeks consolidating here at this 23 level, 23 to, we'll call it 25. Had a big sell-off. Now it is green today. It's bouncing off its 200. It's above its 200-day and bouncing off. Now we were back in, last February and March. Same thing, and it eventually failed. So we'll see. But S&P, I think S&P, I think the best world index or best asset to start the year. Someone pointed that out to me this morning. So that trend hopefully is not back for yet another year. Hopefully we will get some variety. And I think a weak dollar can kickstart a lot of that. And you've had, Greece has held up. Greece hasn't even stopped.
No.
Now, granted, it's been one of the worst areas in the entire world to be for the last 15 years. Or, it's not 15, but 8 to 10.
That run from October, you can pretty much put in the turkey category from like last summer. Just kind of a crazy run up.
Yeah, Turkey itself. So Turkey had a nice bounce off support this week. Mexico, nice bounce off of that 55 level. So there's a couple foreign weekly candles that aren't going to look too bad. Latin America as a whole, not really following suit. Argentina, you would think, or at least I would have assumed it would be more similar to Mexico. It hasn't broken down. It's still above, ARGT is still above.
Mhm.
We'll call it 38. But yes, still some pretty positive things. Small cap staples, if you're into that. Going out to, I think that's going to be all-time weekly closing highs. Yeah. All-time weekly closing high. If we were to, again, we've got a few hours to go.
I mean, if you're not involved in small cap consumer staples, I mean, what are you even doing? No.
So that's some other things. Telecom's going to have a decent weekly candle. Corn's just sitting here. What about our food commodities, Kevin? Anything going in our grains or?
I don't remember if it was this week or actually it might have been last week, or because of how that when the eggs were kind of a big story. I think that was right around when like orange juice futures were kind of taking off. So I was kind of
still running.
Yeah, I mean,
orange juice is still going up.
It's cooled off a little bit, but still.
Breakfast is gonna. So breakfast
The thing, they're going
expenses
after
are in an
breakfast.
uptrend.
Yeah. Because you figure they got the eggs, right? Talk about that. Orange juice now they're going after. Actually, cattle futures been on kind of a run too. So if you wanna,
okay, so no sausage patties.
yeah, you can stretch that into that there. Hogs, not as much. So bacon,
Okay.
I guess we still got a chance.
Bacon
So we'll see.
and coffee. Coffee.
Actually, yeah, that's a good call. Yeah, coffee too.
Is up a ton this year. Didn't have a great. Well, I mean, it hasn't. Yeah, had a horrible 2022. Coffee was down 46% last year, and up 30% this year. So
if you're going out to breakfast anytime soon, get water, bacon, and maybe like cereal or something like wheat toast.
I was gonna say maybe just like toast. Wheat looks like it's stabilizing, and wheat's still in a downtrend.
Mm-hmm.
Oats probably still in a downtrend. So yeah, not a lot of excitement if you're trying to.
Yeah, you could have some oatmeal. Go for that. It's a nice hearty meal.
Do you put anything in your oatmeal?
I don't really eat a lot of oatmeal though, to be honest with you. But no, not usually.
When I was a kid, my grandmother used to put raisins in it, but I never did like the cinnamon or anything.
A few raisins.
All right. So anything else that you think is important to leave our listeners with today, Kevin?
I'd say recently, I know we kind of talked about, like bonds not necessarily looking so hot.
Yeah, bonds of all shapes and sizes.
Yeah, you really got to kind of scrape the bottom of the barrel to find any hope for bonds really at this point, at least in the short term here.
Yeah, and green today, but I mean rates look like they want to go higher. Our friends at the Fed tell us every week they're going to send rates higher. So those, I don't think the market's calling anyone's bluff in regards to the direction of rates right now. Maybe there's lots of arguing over the pace, but the direction is, we've broken this rate of downtrend. Rates kind of peaked back in October, when stocks seemed to bottom. So with rates on the uptrend again, does that become a headwind for stocks? I don't know. We'll see. But yes, clients, I would say don't expect bonds in the portfolios anytime soon. Nothing has changed.
Outside of like a real short-term T-bills.
Yeah, short-term T-bills. You look at your BIL, and that looks great. But yeah, anything with decent duration is
not looking so hot. I mean, there's actually kind of a convertible bonds, oddly enough, we're holding up somewhat well, but that might change today. I don't know. It's kind of right there. It's a little early to tell, I think.
That the VCIT
or ICVT, yeah.
ICVT.
They're trying to hang in there, but
Those look like, and when they look like kind of like an equity index, which I guess, they're convertible.
yeah, and I think too, when we really dug in there too, right, a lot of these bonds are tech company bonds, I think.
Yeah.
Is what it kind of looked like for the most part.
All right. Well, I don't have anything left. Not a week that I think gave any dramatic clues as to where equities go next. Probably some clues in the bond market. We are rolling over. That seems to be confirmed this week. Other than that, I don't have much.
No, I think they're good for my end.
All right. Well, have a great weekend, everyone.
Yep. Have a great weekend.